Welcome very much to our webinar. We are delighted you could join us. My name is Terry Kinyua from Invest in Africa. I'd like to give us a couple more minutes for other participants to join. But in the meantime, I would like to invite everybody who is already on the call. Allow me now to hand over to Wangeshi Morioki, our directors, to give us a welcome and to let us know more about the session. Welcome, Wangeshi.
Thank you, everyone who is joining us this morning. My name is Wangeshi Morioki, and I would like to start by, first of all, thanking you all for joining this webinar. And I do recognize that we have done this on short notice because of the tough times that we all find ourselves in. So represented today, we have about 17 or 18 organizations that have registered. I know not everyone has joined in, but we are providing support to everyone to just come on board and let's have this conversation. So I will start by very quickly introducing Invest in Africa and talk about who we are and why we are here and why this is really important. So we are private sector Pan-African non-profit partnership initiative that is working across 7 countries in Africa. And the aim, or rather Invest in Africa, really is working to drive economic growth and job creation by catalyzing small and medium enterprises. We are primarily working with the mission of enabling SMEs to link with large organizations and multinationals by focusing on 3 things. One is enhancing access to skills for SMEs, improving access to markets, and also improving access to finance for SMEs, which we understand are some of the pressing pain points of small and medium enterprises. And we deliver our programming on our technology platform, which is biashara.now. Some of you are members of biashara.now or biashara now, and this is the technology that facilitates or enhances the linkages. So to date, we are working with 2,500 plus SMEs on our network, and we've created an support ecosystem for the development of small and medium enterprises. On our ecosystem, we're now working with a group of large organizations and corporates. So we partner with large private sector organizations and buyers who procure from our SMEs on Biashara Now. We also partner with organizations to provide targeted skills development under our skills program or our business linkage program. So we work with consultancy firms, we work with universities like Strathmore University, we work with AMSCO, we have coaches, we have trainers, we have business development experts, all who come together to provide support to the SMEs on our ecosystem. And finally, we partner with financial institutions, we are partnering with banks and impact investors who have a specific mission to provide financial linkages and make this readily accessible to our SMEs. So that is who we are as Invest in Africa and why we are here. So first of all, we are here because of COVID. COVID is here and we must confront it. I think under normal circumstances would not have met in this setup, but it is here. And the pandemic that we're now looking at has really hit businesses hard. It has hit us hard, and we are now witnessing a pandemic or something that started as a health crisis. It has metastasized into a global crisis. The scale of change that this particular coronavirus has engendered really compels us to reflect on this as not a health crisis, but as a global economic issue. We are now talking about an unprecedented new reality, and everybody is forced to think about this new reality. The world seems to have turned overnight, And we do believe that after this crisis, there will be a next new normal. There's something that's going to emerge after the COVID battle is won. But what we are saying is that we may not be able to estimate how long the crisis will last. Nobody has that answer, but we are very, very clear that when we land on the other side, it will not be exactly the way it is today. And we have to find that particular path. So that's why we are here today, to facilitate this session, because we are cognizant that SMEs will undoubtedly bear this brunt of the economic downtime. It's a very difficult situation. And as I mentioned, Invest in Africa is driven by the need and the commitment to support small and medium enterprises. So our partnership with EY this morning is to design this webinar specifically to support you on 3 things. 1, for you as an entrepreneur or as a business person to weather the COVID-19 storm and enable you to cope by putting in place a sound business recovery plan. So that's number 1. The second objective of this webinar is to help you to refocus. You know, at this particular time, businesses, people have been thrown off guard. You know, some are still wallowing in uncertainty and wondering, do I close? Do I shut down? Do I continue? What do I do? But we are here to help you to refocus, because as this impact of COVID-19 grows, we need to think ahead. We need to build resilience and to help you to recover, because this shock will eventually, there will eventually be an upturn. And so how do you refocus? And thirdly, how do you reassess your business system for contingent actions that will enable you to return your business to the right momentum, at the right pace, and at the right scale? So this is the first out of this series. We will be running more of this, and we shall continue advertising them and promoting them as time progresses. And we want to thank you very much. So as Terry mentioned, that you will have an opportunity to ask your questions. So we'll continue to encourage us to be as interactive as possible. We are your partner in your journey of growth. We want to go through this together. Remember, you're not alone as an SME. We are here to walk with you, and no one has been through this journey before. So I would like to introduce our speaker for the day, who will be facilitating this session. We are collaborating with EY. EY is one of Invest in Africa's global partner. I'm sure most of you know them as Ernst & Young. And this is one of the largest professional consultancy services firm. It's a global firm. So like we said, we connect SMEs to global organizations. And we are very privileged to be led by a partner of EY who leads the East Africa markets and is based here with massive experience, as you can see from his profile. He has over 18 years experience and expertise. He has worked as an MD of a management consulting firm. He's been a director at an investment bank, and he's got very many qualifications and credentials. So he's very well qualified to speak to us as entrepreneurs this morning. So I will invite Frank to take over from now without much ado. Let's continue asking our questions on the chat. If you have a question, you can raise your hand. And if there's anything that stands out for you, feel most welcome to also post it on the chat. So karibu sana, Frank, and welcome to all of us.
Thank you, Wangeshi, for that. I'm going to share my screen as we speak. I guess as a start, it's to mention that based on all the interactions we've had with clients such as yourselves, it's definitely not an easy time for businesses, particularly business owners, and more importantly, of course, reacting to what this pandemic has done to the economy and indeed to our personal lives. Is not easy. So what we are going to discuss in the next session is going to cover really 3 things. The first one is we're going to give you a sense of the global and regional outlook. specifically what we are seeing happening in other markets. As EY, we've been fortunate, or unfortunate, shall we say, to have been involved in helping both government and private sector from day one through our China office. In the course of that, we've then supported governments in Europe and US, and now here in Africa, and more importantly, in Kenya. And after the regional outlook, I'm going to also take you through some of the emerging areas of concern, the key priorities, and how to respond, including some practical insights on what we are seeing work, and what the sort of questions you ought to be asking as business owners and business leaders. And then after that, we are going to cover the 3-step plan that will give you a sense of what you ought already to be doing, and more importantly, how to plan to get out of this crisis, fully resilient and well positioned to participate in the recovery phase of this pandemic. Before I go to the regional outlook, I think I should also mention that as EY, we've been very close to our governments here in East Africa. We are directly supporting the recently announced COVID-19 emergency response fund, including being part of the team that designed the program itself, and we are also doing the same thing in SA. We are looking to do that also in Tanzania and Uganda. So just starting off on our global and regional outlook piece, I guess the first thing to do is actually to take you back to the World Economic Forum that was held tail end of last year. On the back of that forum, various critical global risks were identified, and more importantly, were shown to be interconnected in terms of how they influence each other. To start off with, of course, when this report was produced, and that was at the beginning of this year, sometime in January, as you can see on the screen here. At the time, it looked fairly disconnected, and more importantly, difficult to see how something happening in a city somewhere in China would really stop the globe as it has done. But the truth of the matter is, the report showed at the end of last year that in reality, we are so interconnected now that if you're a local business anywhere in the world, if you're not if you're not tapped into what's happening globally, you will probably be caught off guard. This is what has happened actually in reality now. The screen in front of you on the top left, you can see infectious diseases on your top left, just under extreme weather. Infectious diseases, if somebody told you this was going to be a big deal last December, it probably would not have featured in your radar. It is now a reality. We are now seeing also energy price shocks, bottom right. We are now seeing unemployment in reality. We also see financial failure. I'm going to mute the guys who are talking so that we have a current discussion. Just give me a second. Okay. So I was saying the global risks that have been identified on the back of the World Economic Forum are actually coming to be. In our experience, all these risks are now a new normal. It will be normal for a lot of these risks to be crystallized and become real, and to then roll on into potentially global crisis, if not regional crisis at a minimum. Unemployment now is real. Social instability is on its way, depending on how governments handle this. And on the back of that, there will be other interactions in our market. The key thing to take away from this slide is that you have to really be plugged into what's happening in your environment, and being narrow focused on your particular sector or area of play is probably not the best strategy. This slide gives you a sense of the difficulty there is in governments having ability to focus and get long-term strategies in place. The reason being that there are a lot of blinds and risks that are catching governments off guard, specifically around how the pandemic is supposed to pan out. You have seen what has happened in Italy and Spain. You've seen what is happening in the US now, and you've also seen what's happening in UK and of course back here. The key thing to note is we are saying that as these crises come up, because of the nature of the way the world is currently ordered, it becomes extremely difficult for governments to get a hold on what responses they need to have in place. So we are seeing a lot of reactionary policies and reactionary government measures, a lot of which are now real in our markets, including, for example, what has happened around the restriction of mobility and some of the other lockdowns, which we'll come to. The key thing to note from this slide is you as business people have to stay very close to number one, governments and what they are doing and the policy interventions they are putting in place. And then number two is, if you belong to industry associations, the likes of let's say KEPSA or Kenya Association of Manufacturers or the likes, then you need to be fairly active in these associations in order to push through your policy to lobby for your policy positions, because government right now they do not have necessarily full handle on how to react to this. This slide gives you a sense of the huge difficulties a crisis like this is causing around forecasting the economic effects of the crisis. What I would like to draw your attention to is point 2, 3, and 4. So I'll start with point 2. It's rather obvious now that labor movement and how you work with your people has become extremely hampered, and we'll come to a session where we'll highlight some of the ways you might be thinking about this. Specifically, your ability to still work in the same way you used to work before the crisis, and more importantly, government interventions that restrict your ability to actually do business the way you would have wanted to. Number 3 is around business liquidity. In the last 4 weeks, almost 80% of all the client assignments we've done as a firm has focused around liquidity management. Never before has the phrase "cash is king" been more poignant. We expect this to continue to be the case. Again, we'll cover in the subsequent slides some of the things you ought to be thinking about around this topic on liquidity. And the fourth point to mention there, which is number 4 on the slide, is around the various fiscal stimulus that are available either directly from both the government as well as the industry, but also from the development, financial DFIs and other development partners such as World Bank and the IFC and African Development Bank. I'll touch on examples of those and potentially how we could consider tapping into that. The other factors around pandemic, the epidemiological factors and political factors, I think I'll skip that. The takeaway from this slide is that there's huge uncertainty around forecasting the economic effects. You need to essentially anchor down around managing your cash, managing your people, and of course tapping into external resources that are available from the ecosystem, which I'll come to. The next slide gives you a phased view on where this thing is headed. And this is primarily informed by what has happened in China, where for all intents and purposes, they are now in the recovery phase. Here in Kenya, we are of the view as a firm that we are still caught out between phase 2 and phase 3. So you've had huge sector disruptions, obviously travel restrictions, the tourism and hospitality sector is in more or less tatters. Supply chains have been disrupted, psychological risks, of course, around mental health and all that stuff. And then phase 3 around potential labor shortages, obstacles to business resumptions. You've seen some of the markets fall dramatically, public events cancelled, layoffs potentially being announced, and other vulnerability increases. The key point, I think, to take from this slide, at least the top end of the slide, is that we are not in recovery, but if you are to think about recovery, which is what we are, when we discuss with boards and business owners like yourselves and other C-suite stakeholders, the discussions we are having is how to think about recovery and to start planning about recovery now, so that when time comes, you are not late in the game, or even more importantly, it doesn't end up with a tighter position than it currently is. I would draw your attention to phase 4, specifically on 3 things, and we'll touch in a bit more detail in the preceding slide. But just to mention, there is expectations that there will be businesses that will become or go bankrupt. It's unfortunate, but that's the trend that's happening in other markets as well. The question to you yourselves would be, how do you plan to manage that, either of course as your own business, but even more importantly, the impact that can have on your own business. The example is, do you understand which are your critical suppliers that potentially could go out of business? Or do you even have a sense of who are your critical customers that could go out of business? So the bankruptcies might not be your businesses, but they might be businesses that are actually linked to your own business. Therefore, think of it in that sense. It might be a business that goes broke. Let's assume you supply a hotel and the hotel chain goes bust. Potentially, if that was your key customer, you are also in dire straits. So getting a sense of that is important. The second thing to mention is the new business and new business models. I'll come to that in the crisis management team. Keep note of that point around new business models. It's important to be thinking about how to reposition your business, and I'll touch on that later. The last bit is around credit shortfalls and non-performing loans, and the current environment that actually is allowed now by the Central Bank of Kenya to have renegotiated facilities with your financials, particularly the local banks. And again, I will come to that in the next slide. Before I move on from this slide, let me highlight something that is should be of particular interest to you on the bottom end of that slide, where we have the fiscal bucket here and the business bucket here. The 2 things you'll see common there is reference to taxes. There have been certain tax measures that were announced, specifically here in Kenya, by His Excellency the President, and those are in the process of being put through via the amendments that need to be in place for them to actually become a reality in law. We are working with clients to enable them to take advantage of those tax measures, and it would be advisable for businesses like yourself to similarly be thinking about how to plan for that. It will contribute, of course, to your cash reserves. It will also contribute to the stress that your cash flows might already be going through, and even more importantly, it might actually be a lifeline for your business to survive through this crisis. Again, in summary, for this slide, in Kenya, we think we are between phase 2 and phase 3. We're encouraging our clients to think about the recovery phase and start planning for it now, and also, of course, to take advantage of the various fiscal and the tax opportunities that are there to help support your business. Moving on to the next slide, the last slide in this section. This slide essentially, it's a bit of a noisy slide, but the key point here is to highlight the various policy levers that are available to government, and that you as private sector players can actually plan for and take advantage of it. So let me start with the obvious ones. The obvious ones would be financial related. So, for example, there's opportunities now to cooperate with government around public-private partnerships. So, for example, under the Emergency Response Fund, the government is keen to support the local manufacturing sector to provide the COVID-19 medical kits and things like that, including various tax breaks to enable you to do that. Again, that will be something you want to move fairly quickly to take advantage of, particularly working through the key business associations such as CAM and of course people like IIA, of course, would also be relevant to that conversation. The other thing to highlight here is the global emergency funding that is coming through WHO, IMF, IFC, and the African Development Bank, including the EU institutions. A lot of funding is actually being, for lack of a better word, poured into the economy to enable and support businesses. How you as businesses tap that is it needs to be something that I guess you need to prioritize. It would be unfortunate if the funds are available and you don't take advantage of them and therefore go through the hardships as business people. Last point to mention, just to more or less emphasize the point from the previous slide, is the monetary policy measures that are there. It can be more specific and say the Central Bank of Kenya, through in collaboration with the Kenya Bankers Association, announced made certain decisions about 2 weeks ago. Three of the ones that are worth highlighting, of course, is actually the base rate that should mean that you are able to access loans at reduced interest rates. The second thing was the central bank reduced what's called the cash reserve ratio. That means banks are now required to hold less money in their for regulatory purposes, which means about 35 billion to 40 billion is now available in for banks to lend. So you would expect that even both big and smaller banks have now more liquidity and therefore should be more open to discussions around loans. And then the third thing is a directive by the Central Bank of Kenya to banks that in both individuals and businesses can approach banks and ask to have their loans restructured. That restructuring could be the reduction in interest, the applicable interest, or indeed lengthening of tenure, lengthening of the period of time you have to pay. It could also be the frequency of payment. So maybe if you are paying monthly, you might ask for quarterly payments and things like that. So those are things that you ought to be having conversations with your banks now. There is a directive already in that sense. So you're not, it's not a favor you're asking, so to speak, but obviously you need to have a good relationship with your bankers. I will move on. The assumption is that we will have questions and answers towards the end of the session. So allow me to just move on to the next session. The next section will cover the emerging areas of concern, key priorities, and how to respond, and more specifically, give you some questions that you need to be asking depending on the sector you might be in, that then can inform your response around this issue. So to start off with, I need to highlight nine aspects that we say are critical to a resilient enterprise or a resilient business, so that come this pandemic or indeed any other, you are able to navigate the complexity, the uncertainties that a crisis like this presents. So we have 9 things that have to be in place for a business like yours to survive this, come out the other end resilient, but even more importantly, survive any other crisis that might happen. The first one is around your supply chain. There's no doubt by now that most businesses have had their supply chain disrupted, whether that's directly. So, for example, if you're sourcing goods from, as an example, China, and the ability to do that is now hampered, either those businesses were closed or now that they are opening, because of the recovery in China, they may not necessarily prioritize your orders, or indeed that party service providers in country or anywhere else that that are also either not able to deliver the service that they were meant to do, or indeed are out of business altogether. And we will come to some questions, some aspects on how you need to think about your supply chain going forward, and what some of our clients are doing, including, for example, not just renegotiating supply contracts, but even now looking at what are the other alternative supplies or ways of sourcing to reinforce your supply chain. We expect this to continue to be a protracted phase, it takes a while to get back to where we were. So you would assume that supply chain will still continue to be a headache for all businesses. For our talent and workforce is rather obvious now. There are restrictions on how employees can come to work, if at all they can come to work. The business travel is hampered. We think that this will be the new normal. It is highly unlikely that we will continue to work the way we were working before the pandemic. If anything, your employees expect that it will be a different thing. So you ought to be thinking about how to reposition how you continue to work going forward after the crisis. The number 3 is around the how you interface with your customers now that all sorts of disruptions have been there, including, of course, being empathetic to their concerns. A lot of our businesses are having to revise their operating model and therefore also revise who their customers are, and even more importantly, how to work with their customers. Some of the things, of course, to think about is how to interface with your customers more directly. So, for example, we are seeing businesses in the hospitality space. So, for example, hotels and restaurants having to position and service their customers more directly, either through, for example, takeaways or home deliveries, or indeed providing other services beyond food and accommodation, such as takeaway cleaning and all that stuff. Number 4 is around the financial investors. I've mentioned tax strategies. It is going to be a key point going forward, even after recovery, and also, of course, how you manage your liquidity, credit, and capital. We will come to aspects of that in the next slide. Number 5 is around risk, enterprise risk. Generally, we as EY have a risk assessment tool, which I'm happy to share after this presentation. It enables you to do a quick assessment of your risk across the entire organization, and then gives you a visual view of where you have gaps, and therefore what you need to prioritize in terms of remediation. Business continuity has been mentioned in the introduction by Wangeshi and Terry. To be honest, we are way too deep in the crisis now to be talking about having a business continuity plan. If you didn't have one, it's probably quite bad. If you had one, and the question is whether it's working. What we are focusing on now is assume there was one or there was no business continuity plan. What do you need to be doing now so that you recover? And then in future, what should be the business continuity plan that you need to have in place along the lines that Wangeshi made reference to? And also, what are the various scenarios you need to think about? So, for example, yesterday, there's a certain client, the banking industry we are supporting, and what we were coming up with was, what are the scenarios? So, for example, if this pandemic lasts just another 2 months versus if it lasts, let's say, until next year, what do you need to be thinking about? How do you plan for that? How do you allocate resources? What are the tough decisions you have to make now? And more importantly, what are the triggers that will enable you to know what, this thing is going to last longer than 2 months? What are those triggers, so that then you're able to say, I should activate the long, prolonged pandemic plan, not the short-term plan. So scenario plan is important. It will affect your employees, your customers, your profitability, the survival of the business, your liquidity, and so many other things. Employee well-being, I won't cover that. It's obvious by now. Government have made reference to. Technology is a key point. We've seen a huge spike in cyber security, in cyber risk, including, of course, the fact that most of your people, if they are working remotely, are not, of course, they might not necessarily have had their IT infrastructure fully secured. The fact that you're not in the office also presents certain gaps, that physically in the office presents certain gaps that people that are keen to commit cyber crimes can take advantage of. And in fact, even large institutions like banks have already had quite a significant incidents that are not necessarily in the public domain. As businesses, this is a big point. You ought to understand your cyber risk landscape and then decide how you're going to respond to that. And again, as a firm, we can see how we can support you in that. And the risk assessment tool that I mentioned can enable you to get a quick sense of where you have gaps. Insurance and financial recovery in our markets. We are finding a lot of insurance covers are not adequate, or indeed not even fit for purpose in a crisis environment. You've had references to things like force majeure clauses, and the interpretation of those is very, it can get very technical because we are a common law environment where force majeure, for example, has to be specifically in our contracts. What we are finding in reality is this, that number one, if you have insurance cover around, for example, business interruptions, and to be honest, very few clients are, even subsidiaries of multinationals, very few do. What we are finding is you are best placed to first secure the relationship with your key customers, key suppliers, key financials. Once you've got that in place, then you can now negotiate on the potential repercussions of potentially getting insurance coverage and claims and all that stuff. It will be extremely difficult to get insurance companies to necessarily cover your claims in the short term. In the long term, you might have positive responses, but in the short term, the answer is probably don't prioritize that. Instead, look to secure your business and your key customers and suppliers first, and then you can, of course, pursue it later. And then in future, the idea would be to revisit your key mission critical contracts and see what sort of cover you have, and even more importantly, speak to your insurance providers to see what sort of insurance cover they can provide for you, particularly insurance cover that covers a business interruption in the context of, for example, a crisis of this nature. So the key thing to take from this slide is, if this crisis had not happened and you and I were having a conversation on, you know what, I want to build a resilient enterprise that should in the future a crisis like this happen, I will survive and come out right, then we will be talking to you in terms of these nine aspects. To the extent that even as you look at this slide, to the extent that you think you have gaps, then of course the conversation probably after this should be, how do you respond to those gaps? What are the gaps? How serious are they? How do you remediate those? And even more importantly, what are the opportunities to actually redesign your business for the future? Specifically, how is COVID-19 disrupting organizations worldwide? And in this case, we try to make this as relevant to this market as possible. So there are 6 aspects. Number one, rather obvious, I will not cover that. The main thing is, do not expect your employees to work in the same way as before, even after the pandemic goes. And this is an opportunity for you to probably revisit the relationships you have with your key workers and bring them closer. Of course, being empathetic. We are all human beings. It's tough for everybody, but also seeing how best to redesign your organization going forward. There is waning demand, of course, given the various disruptions in the market. There are customers who are staying away from businesses, particularly businesses that require high social contact, like hotels and restaurants, bars, entertainment space, etc., public transport. We are seeing businesses that are particularly affected, reposition their operating model. I'll come to that. Supply chain disruption, I've already touched on that. The legal implications, particularly the one I would want to particularly mention, is the impact of non-performance of contracts on your working capital. So, for example, we are finding clients that have good relationship with suppliers, but suppliers cannot meet the same capacity they were meeting. So let's say, for example, you have a contract with a key supplier, and the supplier is meant to deliver 1,000 SKUs units per week, per day, whatever the duration is. What you're finding is those suppliers are now only able to do maybe 100 or a fraction of that. So there are legal implications, of course, on those contracts, but also there are legal implications on what the business would have to do. So, for example, if you're not able to meet your working capital requirements around payments of payroll, potentially even you're servicing your bank debt, you might have to now consider potentially even layoffs. If you have to consider layoffs, what you need to be doing now is having various scenarios of layoffs, what that means, how much money will be required, what are the legal implications, where will the money come from, who are the people that you might have to let go. How do you manage that conversation so that it's not, it doesn't become toxic? And more importantly, how do you go about doing it in a way that is sensitive to the circumstances and, of course, within the law? And also exiting some contracts whether those are with the clients or indeed with suppliers. Working capital constraints is central to all the conversations we are having. It will continue to be the case for a long while. We see it's going to be between the working capital discussion and your relationship with your employees. These two conversations will make or break organizations. How you manage that and who needs to be around the table to have constructive conversations around this will be the key. I will not cover cybersecurity because I've mentioned that. You just need to be sensitive that there is heightened risk of cybersecurity. In fact, I would be surprised if your systems are already not under threat as we speak. But it's not all doom and gloom. There's an upside to all this. The first one is there are businesses and sectors that are doing very well indeed on the back of this crisis. This probably doesn't sound a very good thing to say, but the truth of the matter is there are businesses that are doing very, very well indeed. The pharmaceutical industry is doing fantastically well. Manufacturing entities that have been able to pivot into the pharmaceutical space and the medical devices space are doing very well indeed. We have clients that are actually their revenues are tracking at multiples of their normal way of doing business on the back of this pandemic. Part of that has been redesigning the operating model. Number two is identifying new markets and new market segments to service. Number three has been quickly entering into joint venture agreements with other companies that then they can partner and service the new opportunities that are there. To the extent that you are in businesses that are either in, for example, technology or hospitality or indeed manufacturing, what you ought to be doing is to say, can you pivot your business to service the new opportunities now? Or if you can't, can you look at businesses that already have that capability and what sort of joint venture agreements or partnership agreements can you have with them so that you can do business together? As I said, the pharmaceutical industry is doing very well. The technology space is doing very well. The education space, to the extent that people are doing e-learning and all sorts of other online type activity, is doing very well. The assembly that is very, very minimal, that is targeting opportunities, for example, in the medical and pharmaceutical space, it has still capacity for an upside, and this money actually being made available for businesses that want to service those markets, those market segments. Again, the question is, how do you pivot to do that? We have clients in UK and US and in Asia that are looking to partner with businesses in Africa to support these sort of opportunities. To the extent that you're able to tap into those sort of relationships, then there's potentially an upside for you. The key thing, though, is that you have to relook at your business, secure it first, and I will show you the suggested way to do that. Secure your business first, stabilize it, then grow it. So that then you can come out of it. And we'll come to more practical examples of how that can be done. So let me give some color on examples in certain sectors that can probably bring it a bit more home to some of the sectors that might be represented by the audience here. The first one I wanted to touch on is manufacturing and mobility, where mobility in this case is related to transport, logistics, distribution, and the like. I've mentioned the disruption in the supply chain. I've mentioned about potentially now pivoting out of the normal way of doing after sales support and thinking, how can I do remote after sales support? We have seen, for example, businesses here. There's a client we were talking to the other day, and they are in they have a contract with. They've gotten a contract with Toyota. I think it's Toyota to support their after sales service for their clients. And the way they do that is they get the order through Toyota. They send their team to the client's home. They sanitize the car at home, pick the car, take it to the garage, sort it out, sanitize it again, bring it back to the client, sanitize it again. So and they are having more work than they thought they would have. Now, what I'm trying to highlight is there is ways for you to think about how to position your business to support what is essential in this particular case. So specifically on manufacturing, disruption of supply chain is real. Stress testing for crisis management. So how do you actually go about reimagining your business? What are some of the considerations you need to be having in mind? Whether that's around how your people actually interact with customers, how you handle any regulatory or legal issues, and what are some of the questions you need to be asking. So, for example, you need to be asking what sort of crisis management do you need to have in place, and I'll show you the example of how you do that. What are the actual financial issues that will come on the back of the business interruption in terms of losses and potentially even damaged relationships, business relationships or customer relationships, supplier relationships. Those are particular specific questions that you need to already be thinking that will then inform your recovery plan. And see why we are able to support your redesigning of your business model. Of course, the business continuity and crisis management, I will touch on that in this session. Advice around your accounting and tax and legal aspects. Example of accounting consideration you need to be thinking now is how do you account for tax purposes, any impairments and bad debts that will arise on the back of the crisis. How do you account or for any write-offs that you will have to do either because your inventory is expired, because you couldn't move it, or indeed your projects that were capital projects that were being put in place now have to be stopped and that project needs to be written off. How do you account for that, and how do you maximize your tax benefit from that? How do you actually even account for employee layoffs if it comes to that, and how does that feature into your tax computation so that when you are able to get whatever benefit you is from that? And even more importantly, how do you defer some of these tax losses for future use to support your cash flows going forward? So these are just some thoughts around manufacturing, the manufacturing sector and transport and mobility generally. This is one that speaks to the disruption around the consumer space. So whether you're in the fast moving consumer goods or retail, the retail space, you will have huge inconsistencies in your supply and demand. So how you normally used to manage your inventory is now going to be extremely disrupted. One day you are out of stock. That's when most customers want it. The next time government has come up with a directive that locks people's movements, and you are based in Nairobi, your customers are outside the Nairobi metropolitan area, how do you service them? How do you even manage your logistics around that? And also, of course, the disruptions to your cash flow and liquidity. And I will mention again in the last session how you should be thinking about securing your cash. Some of the questions to ask is what contingencies do you have should the disruption be long? If in your mind you think this is going to be over in 3 months, then you plan for 3 months. But if assuming it is not 3 months and you have planned for 3 months, then how do you pivot to a longer disruption period? Again, we'll talk just in the next session a bit more on the practicalities of that. But contingency planning is extremely important. Why? It will affect how you do your business. Now, it will even affect whether you can sleep well at night, and I suppose also whether in fact you will have a business that survives, either in its current form or whichever other form. The way you sell to your customers, depending on which, if you are in the consumer good space, has changed and will change dramatically. We are seeing, for example, a huge uptake on digital, on online shopping and deliveries. But what that means then is you have to manage your inventory very different. You probably even would be the one delivering the last mile to your customer. What does that do to your customer relationship? Because the face of the business might end up being a border guy, as an example, or indeed, how do you pivot? Because there are competitors who can do this better, faster, quicker than you. And more importantly, after the crisis, how do you maintain that market segment? Because once people get used to shopping, for example, online, there's no going back. The pickup in, for example, UK, the pickup for online deliveries and online shopping and home deliveries started off slow, but once it picked up, it became the normal, to the extent that supermarket chains, some of them went bust. Managers of large warehousing facilities had to rethink their business. Manufacturers, the Unilevers of this world, had to also rethink their businesses. Similarly, here we are getting to a phase where people are getting comfortable with online shopping and online deliveries. And so, if you are in the consumer space, that should be the new normal, and you need to be thinking how to shift your business in that. If you are not in the consumer space, but your key customers are are businesses that are supporting this consumer sector, then you also will have to be affected. So you also need to think how to respond to that. And we'll come to maybe some practicalities on how you can do that. The key thing is you expect disruption. It has happened. You need to plan for it. You need to come out resilient. You need to have an open mind on how your business now will be shaped going forward. Real estate, hospitality, construction, I will not dwell a lot on that. Real estate and specifically hospitality is in dire straits. It's unfortunate, but it's one of the sector that has been particularly hard hit. The financial community is also not very friendly to supporting the real estate space more readily under the circumstances. So depending on how you're servicing this industry, whether directly or through construction or even supplying to the industry or indeed servicing it, then you need to already be aware that this is a market, that is a sector that is in distress, will continue to be in distress for a while. It takes a while to recover. And the truth of the matter is we also expect a number of businesses to go bust. To the extent that that might happen, and it's highly likely that it will, how do you then reposition your business? And even more importantly, assuming you have cash, potentially how do you buy businesses that might be available for sale, if that was something that is of interest to you? And of course, how do you then restructure the business for survival going forward? We are expecting that there will be government support that will be made available to this sector, particularly our tourism and hospitality sector. To the extent that support is made available, then obviously if you are directly affected by this, then the question is, how do you stay close to that so that you can then link it to that support? Ultimately, you really do need to be aware that when any industry, particularly significant industries like tourism, hospitality, construction, real estate are affected, usually you will find five links out will also be affected. So if real estate is affected, it affects, of course, it affects cement manufacturers, it affects large logistics companies, it affects the energy industry, and of course it affects some of the key services, whether that's legal services, accountants, and all these things. The key point is it depends on where you are. If you are at the epicenter of the pain, your best bet is to secure your facilities, if you have them, with your bankers, or to make a decision to stop and wait until the pandemic eases out, and also to see what support you can get from either government or indeed the government institutions. Or more importantly, consider restructuring the business very quickly, bringing in new capital from whoever can provide new capital, and then at least have the projects completed and you survive the phase. If you are 2 or 3 levels out of that, you need to stay really, really close to the key guy at the middle. So if, for example, you are contracted to maybe construct a big hotel project for some fund, then you need to be very close to what the fund is thinking. Is it a project they will stop? Is it a project that they are thinking of not stopping but prolonging the construction period? Is it a project that they are going to exit? And all these things. You need to be fairly close to this. If you are more in the third phase, so for example, you're in the cement space, or you're in the some of the other building material space, then how you manage your inventory will be key, and even more importantly, who you give credit to will be very key. And of course, how do you make sure you're paid on time, and more importantly, very quickly. This is a sector that will get hit. Our estimate is in the tourism and hospitality space, we had a conversation with KEPSA, and the number we have, which is a bit worrying, let me pull it up. So some of the statistics we have that might be a bit unsettling, but probably worth just mentioning to give you a sense of what's happening is, in Kenya, the estimate is that for the tourism and hospitality space, so hospitality, that will include bars, restaurants, entertainment, sports, all that stuff, about 200,000 direct jobs will be lost. Half already started getting lost and will be lost. In the horticulture space, including flower farms and all that stuff, about 100,000 jobs will be lost, direct jobs. In the EPZ space, about 50,000 jobs will be lost. And then the other numbers like that. So really, it is going to be tight. It is already tight. The question is, how do you secure your business and plan for recovery? And what are the things you need to be thinking about now? So I'll give you 4 actions and talk about more specifically the crisis management plan that you can think about. So the 4 actions we have, as EY, we have a framework on how a business should respond to the crisis we have. The first one is to put your people first. I've emphasized that this needs to be a human-centric approach. We are all people, humans, of course. We have families, we have friends, we have personal lives. Ultimately, your employees are your most valuable asset, if I can use that word. So how do you make sure that your most valuable resource is well taken care of? The first thing, of course, is you put people first. You encourage flexible and remote working. You think about how to make sure that your employees, if they are on site and if they have to really be on site, how they are protected, what safeguards you have in place for them, and of course you adhere to whatever regulatory and government directives are there. It's important to keep your employee constantly informed, and in fact to even to involve them in rethinking how the business can survive. We've had quite stressful conversation with a lot of our clients around the people agenda, and what we found to work and relieve the pressure we all will have around this, particularly as you as business owners, is co-opting your people in discussions on how to reposition the business. Your people already have very good ideas. It's just a question of ensuring it's a conversation that is well managed. Then you can have good suggestions on how really this can happen. Globally, if I may speak about UI, globally we are about 300,000 people spread around 50 countries. Here in East Africa, we are about 800 people. So every other day, one way or another, our employees are meeting with us, not all of them, of course, at the same time, and we talk about what's going on, how our clients, how they are feeling, how they are coping, and all that. So we have various groupings on how that happens. We found that to work, and we know our other clients are also doing the same thing. So put your people first. You will need them now more than ever. You will need them even more after the recovery. How you treat them will be key. And I think it's rather obvious that if you're not nice to them now, they will not be nice to you going back. Number 2 is business continuity. You need to protect your business. Keeping a trending mindset. So a trending mindset in this scenario means you should see this crisis as an opportunity. We had a webinar the other day for the British Chamber of Commerce, and that was actually that point occupied most of the conversation. This is an opportunity if you see it, if you plan for it to be. So your ability to redesign your business, your ability to get closer to your suppliers, your ability to get closer to your customers, your ability to get closer to your employees, your ability to rethink your business and what is important about it, and potentially what waste has been there in your business because there was never a crisis. This is the time to be having those conversations and to prioritize them. Keeping your customer close, staying close to your suppliers, revisiting the commercial relationships you have. If you have contracts that are not going well, agreements that are being violated, then our advice is have a conversation. Don't opt for legal action and all these things as a first step. Everyone is under stress. It will make or break those relationships depending on how you react to them. But the key thing is you need to know which ones are the key ones and how do you then manage those. And of course, developing contingency scenarios, as I mentioned before, on what happens if you can't get all your workforce back. What happens if the supply chain is fully disrupted and you can't actually source from the same people you are sourcing ever again because they've gone out of business or something like that? What happens if, in fact, your business model cannot work because you can't move because of government directives, your employees can't move, your customers are not available, your suppliers are not, blah, blah, blah. How do you protect your business so that then it can survive this period? And of course, who is supposed to do what under the circumstances? So the other day we had a client where the business continuity plan, very well thought of, particularly specific and all that. And then it turns out 2 of the people that were very key to the business continuity plan are stuck in Egypt. Right. So you actually have a paper that is useless, so to speak, because what we thought was going to be the crisis was going to be maybe a flood or a fire or something like that. It's not people stuck in Egypt and they can't travel and all that stuff. So again, it's how do you repurpose your business continuity plan so that it can then respond to this. Very quickly, build and secure liquidity. Very important. Cash is king. You need to get a position on where your cash is, your cash position, your sources of cash, and more importantly, how else you can generate more cash. I'll touch on that a bit more in detail in the next slide very quickly. Engaging your stakeholders. You need to know who they are: customers, people, financial, government, tax, regulators, etc. I will share this slide with you. You can have a bit more you can have a look at a deeper dive on your own, and of course you can come back to us with questions. Let me hurry up to the last section so that we have enough time for questions. And what we have developed as EY is a 3-step approach to enable you to manage the crisis and come out of the other side resilient and ready for growth. The first stage is to activate your business continuity plan. If you don't have a crisis management team, you probably should be having one as of today. And what it really is supposed to do is to enable you to manage the crisis as a team, and more specifically to set the priorities of what needs to be done, who needs to do what, and more importantly, what are the deliverables. A crisis management team with a structure behind it, and that's something we can give you a bit more advice on if that's required on your end. The second thing is to do the risk assessment and scenario planning. I've mentioned we have tools we can provide that will enable you to do a quick risk assessment to see where the gaps are and how to respond to that. And then communication, very, very key. Now, if you didn't have a business continuity plan, and a lot of our clients didn't have, if you didn't have one, what you need to be thinking about right now is, at a minimum, set up a team to think about the crisis and to come up with priorities so that you can plan around that. You can always have a business plan later, having survived the business. So, number one, minimum, set up a crisis management team and let that be the focus of it. And then, of course, use the tools like the one I've mentioned to do a risk assessment to then guide your what you need to do next. Number two is to protect your business. Of course, secure the well-being of your people. Now make sure that you can source your supplies from alternative sources should the one you currently depend on be constrained. Secure your cash. Cash is key. Now, I cannot possibly belabor this more. In the event that you do not have cash, either from existing reserves or from other financial providers that can give you some facility to support you, then it's a question of what do you need to let go of doing so that you can secure at least the business, you protect the business. If you do not have cash at this point, your first priority ought to be, how do you get that amount of money, an amount of money that will secure the business? And what are you going to secure? You're going to secure the results of the risk assessment, what was done in phase one. This one is what will tell you what needs to be secured. So, for example, it might be, you know what, we need to at least pay our payroll. We need to maybe not pay our rent. As an example, I'm not encouraging that happens. Maybe not pay your rent, but pay for your supplies, whatever it is. The point is, you need to secure your cash. Now, the best way to do that, of course, is reduce waste. So cut out non-essential expenses, and that's that assessment I've talked about will help you do that. Number two, assume the worst case scenario. Worst case scenario is that this pandemic is going to go on for a long while, and therefore say what are the various capital projects, for example, you need to stop doing. So if you're going to build a new branch, maybe stop, don't do that. If you have a loan, you need to go back to your financials and say, ladies and gentlemen, we need to reorganize, to restructure this facility. If you are a single shareholder and you think, you know what, for this business to survive, I need to invite somebody else to participate in this business, this is the time to add additional capital into your business. So this is the time to protect your business. Otherwise, what you will have is not just stress, but potentially a business that runs out of steam should this pandemic go longer and longer. Once you protected your business, you now plan for growth. How do you do that? The first thing is you need to revisit how you go to market. Do you continue to operate to go to market in the same way? So, for example, do you go buy things in? Let's use just a simple example. Do you go buy things in the open market, load them up in a truck? I'm just using that as an example, and go sell them across town to a different customer? Or do you now say, you know what? Actually, I can't do that. The way I go to market now is I'm going to maybe do things online, or maybe I will need to partner with other customers who already have big contracts, and I will just be a subcontractor to them. Maybe I will now be only doing portion one of a big thing, and that is the only thing that I will specialize in. As part of doing that, you also revisit your operating model. So the example I was giving you is the restaurants, the Javas of this world now are saying, okay, we can't have customers come through the door. What do? We're going to do takeaways. We're going to cook meals that we supply to hospitals. We're going to do meals that we supply to quarantine or isolation centers. So there are different ways. They have even started now talking about, can they do dry cleaning or pivot to other services. The point is, once you've activated your business continuity plan, you've protected your business, particularly around people and cash, and then you reimagine how you go into the market. More importantly, of course, is you need to do this in consultation with all your key stakeholders, whether those are your employees, your shareholders, and also, of course, your families, depending on their role in your business. I'm going to stop there, conscious of time, and what I will do is hand over back to Wangeshi so that we can then have a question session, and then maybe that will inform what we discuss going forward. Wangeshi.
Okay. Thank you very much, Frank, and a big thank you to our guests. I know that this has been quite comprehensive and quite heavy. At the start of the session, I'll just take us back to the start. We had some instructions from Terry. One is to we can see we have new members that have joined in. Against the participants icon right down there, please click, and there's an option allowing you to rename. We really want you to introduce yourself. So, for instance, I can see Linda Onyango, I can see Jimmy Malu. Welcome. Kindly just go to the rename option and write your organization and your title. We just want to get to know who's here because we would also like to network and participate. Secondly, there were two options. One is to post your question on the chat function. The chat icon is right next to the button indicating participants share screen right there. I'm sure you have burning questions on any aspect that has been presented by Frank, and particularly for business owners. I think he has drawn on a couple of things regarding our approach being human-centric. How do you manage cash, cybersecurity, so many aspects, and you may be having a question right there for Frank. Please let's utilize the chat screen, the chat functionality to post our questions so that we can collate them and give time Frank to respond. Secondly, the other option is by raising your hand. Again, when you go to you click on the participants icon, there's an option there on raising your hand. Like I'm raising mine now, but I will lower it. Raising your hand allows us to see who would like to post the first question. So there are two options. You can either type your question or you can raise your hand. And when you raise your hand, we will give you the chance to speak. And for those who will not be speaking, we kindly request you to mute your mics to minimize the feedback. So thank you very much. I will leave the floor now open for you, our business owners, our entrepreneurs, our business leaders, to respond to the presentation that has been made by Frank with questions. And even if it's not a question, you could still post on the chat on what has really stood out for you. So thank you. So it's time to be interactive. Please raise your hands or raise or post your question. Karibuni. And we also recognize that we have a constituent of SMEs from different sectors. We've actually got two SME leaders, or rather not SME leaders, business leaders who are managing hospitals right here. So we welcome you. We would really want to invite the diverse views. We have participants from the construction sector. We have companies in advertising. we have general services. So we welcome you, and let's be as diverse as possible as we interact. Karibuni sana. Questions, you can raise your hand.
Yes, Charles.
Can you hear me?
Yes.
Yes, I just want to take you back to the emerging areas of concern. You had mentioned about customer safety and brand protection. Could you just expand on that?
Okay.
And then,
So,
secondly,
yeah.
I also like to maybe you can explain further how we can access or what's the process of accessing funds through the stimulus that the government is putting in place. In terms of now the phase 3 of recovery from the COVID, what is the process for that? How can one get access to that funding of the stimulus? So those are my 2 questions. Thanks.
Okay. So maybe let me respond to that while the others think about the question. So let me start off with the customer safety and brand protection. So the first thing to mention is that in many ways the government directives have overtaken events. Let me put it that way. So when this crisis started, before the serious government intervention came in, the retail outlets, the hotels, and indeed even our entertainment spots were not necessarily looking to minimize exposure for their customers. And what you are seeing certain clients do that was particularly visible compared to what is happening now was that the simple things of getting sanitizers given to customers. In fact, in some restaurants, they moved the spacing of sitting in some offices. They even spaced out how customers come into the office and sit. And indeed, we found there's a manufacturing entity we went to where they were giving people masks, clients masks as they come in. The key point was it enabled clients to see that you have their interests at heart. Of course, now that government has moved in to enforce certain directives, that has become more of a regulatory requirements than otherwise. But the key takeaway is how do you think about your customer in this scenario? How do you go out of it to secure them, whether physically or indeed how do you reposition how you interact with them? Maybe it might be that so I saw, for example, one of the subsidiaries of one of the banks here getting their customer relationship managers to set up calls like this with their customers to talk about how the business is doing, and of course reposition the interaction now to be as we are doing now online. So it's say for example, depending on which space you're in, Charles, I think it's in the event space, if I'm not wrong. The question now becomes if your key customers, let's say your key customers are weddings, or I don't know who your key customers are, how do you go back to all the people where your events were cancelled, and how do you work with them on what are you thinking? I know this has impacted you. Here are different ways you might still hold your events. For example, have you considered having online events? Have you considered having an event where instead of having 10 people in a room, it's 5 and it's different breakout areas and things like that? So you're saying you still want to do business, but you're putting your customer safety at first. And of course, it will also, even the fact that you're having those conversations with your client enhances your brand. Okay. Now, the ideas might become different, but the fact that you've said it's about the customer and you're having conversations on their well-being will help support that. There are other ideas I'm sure that can come out of that. your particular sector, I know, has been particularly impacted. I guess it's how to innovate now under circumstances. And surprise, actually, in the US, remind me, I'll send you a link. In the US, there are companies in the event space that have been able to reposition their business models quite successfully. So maybe there is some practical ideas you can pick up from that. On GOK, on the stimulus that's available, so there are two ways to access this. There's the basic aspect that I referred to, which was that the money has been provided by the likes of World Bank and IFC directly to GOK for GOK to stimulate the economy. And it will do that through particular projects, but the one that I would want to draw your attention to, and us as EY are supporting it in terms of program management and design, is the COVID-19 Emergency Response Fund. Okay, the COVID-19 Emergency Response Fund, chaired by Jean Karuku, as you know, with people like Matiang, etc. on it. The essence of the fund will be to, of course, help those who are vulnerable, etc. But at the heart of it is to stimulate the local private sector. Okay, so for example, preference will be made to companies, Kenyan companies, to provide supplies and services instead of importation. Okay, and those funds are being made up. The fund will make those opportunities available to the private sector, such as players on this call. You need to stay close to that. Number two is the likes of Danida and FSD, the financial sector deepening FSD Kenya, is in the process of putting together funds that will be available again for SMEs. The way to tap those, the ready way to tap those, is through your bankers. So your bankers have received funds that they are meant to make available to SMEs. So I would advise that you, depending on who you bank with, you go sit with them and talk about three things. You talk about restructuring your existing facilities in line with the CBK directive. Number two is to give you access to funds that have been made available by development financial institutions for lending to SMEs. Okay, and then number three would be the COVID fund that I've just mentioned. Okay? Now, more and more of these funds will be made available. I mean, we are talking about fairly significant funds. It's how you reposition yourself for that. But at a minimum, you need to be talking about definitely the COVID-19 fund and how do you tap into the opportunities there. And then number two, how do you talking to your banks to avail you better facilities. Any other question?
Okay, thank you. Thank you so much, Frank. I just wanted to point out to the participants that we will soon be hosting some of the banks, Equity and Stanbic Bank, to talk about how they will be disbursing these funds to businesses, to medium-sized businesses, and also to the SMEs. So please be on the lookout for that webinar. We shall be able to, we'll be able to loop you onto it, and the registration process will just be the same. I still want to encourage us to ask questions, and feel free to even comment or respond to any of the points that Frank has highlighted. If there's something that has stood out for you, or there's a question that you have, it's the right time, because we only have a few minutes with Frank before we close this out. So karibuni sana. Comments, questions, any burning questions?
I assume that you're probably digesting the session that we just had. What I would suggest to you, even as you think potentially of whatever question you might want to ask to. Although I've seen fellas, but let me keep quiet. Their hands are going down. Lois Wagana.
Based in Nyeri, I'm a cardiologist working in an outpatient center right in Nyeri town. And I just wanted to make a comment concerning patient numbers that we have seen that have come down. And ours is a clinic that deals with non-communicable disease. And the concerns that we have concerning this is that we expect in a few months that there will be an upsurge of non-communicable disease. We are finding it difficult to tailor a solution to be able to see our patients online. So maybe just a comment to say that, and also to appreciate the discussion that you have given to us. A lot of what you said is very foreign. As you say, we are digesting, but we appreciate what you have said.
It's a question from Anthony Bogua. So the question is, Frank, in every crisis, the aftermath opportunities are huge or mega. Your views to SMEs on how do we approach this? So my comment to that, Anthony, would be, what we are telling both big businesses and SMEs is the first and foremost, and I can't possibly emphasize this point enough, is the first thing is secure your business first. Even as we talk about the future, and I'll come to that, the first thing is secure your business first. And only if you've secured your business do you think about how do you plan for growth. The reason to mention that is, of course, you need to have a business that survives so that it's able to then take the opportunities that come. But also, number two is, as this crisis unfolds, the opportunities will also metamorphosize into something different. So if you don't secure your business and you rush to look at the opportunities you can service now, what will tend to happen is those opportunities change, because let's say the government has made certain directives, or the crisis has deepened, or the crisis has finished very quickly. So instead of starting looking at the opportunities that are rising very quickly, the first, secure your business. Number two now is how to approach the future, where the opportunities that you say are. We have said three things that I think are relevant for SMEs. The first one is, particularly because SMEs might not have very large balance sheets or money to necessarily do large projects, looking at opportunities for being a subcontractor should be a deliberate plan. Okay, so who can you support? Which of the big businesses can you support as a key subcontractor? Either because your balance sheet is not very big. Number two might be, which other new markets can you enter, depending on what you're doing. Say, for example, if you're in a sector that is very disrupted and you need to now shift into a new market segment, what is that market segment? What are the skills that are required? Do you have them? How do you access them? If you have spare money and big enough money to spend, it could be that you buy an existing business, and that is the one that you then use to accelerate it in the new market. But again, not to belabor the point, secure your business first, please, before you then reposition for growth. There is a question from Rahab. Rahab asks, what are some of the ways a company that offers services that offers serviced offices can reposition itself during this time, as most clients are working from home? Perhaps that's a conversation we can have as a group here. But the example I can give is related to UK, so maybe the market might be different. But we've had companies that have large idle real estate space get government contracts to do isolation centers. We've had companies like those repurpose their business model to be what they call dark kitchens. So here in Kenya, if you are in the service offices space, I think I would say again, the first thing is to secure your business. So that might be, you know what, are you going to renew your leases? Who is going to renew your leases? Do you know them? What circumstances are they going through? Might you have to restructure your business? And even more importantly, can you sell your business? If things are really bad, can you sell your business? Can you invite other people to invest in it so that you have capital that can then enable you to come out of it? If you are particularly in the center of the city, I would imagine you really would have to rethink your business model. It's likely that if this pandemic goes longer than it has as it is, you will find revenues drying up. I guess that's not necessarily what you wanted to hear, but I would say restructure your business, potentially consider maybe additional capital if you can, or even maybe get into a JV with other entities that might require your space. It's highly likely that physical office space will be used very differently going forward, and the demand space for that is also going to shrink, given people have discovered they can work from home. Last question, I think that's come through that I can just respond to and very quickly move back is there's a comment around acting to secure the future. I think that is from Terry. I think I agree with that. As I said, securing your business is probably the key thing to do first, and then talk about how you approach the future. I don't see another questions there. So maybe depending on how you want to do it, we can close the session.
Okay, thank you very much. I think in the interest of time, we will have to close this and allow you to also focus on your businesses. So first of all, I really want to thank Frank. I'm sure we can all say that we've benefited from that very insightful presentation. And what I would say really stood out for me is to, first of all, get a grasp of the global context. We are all looking at news of the crisis and how different countries are responding to the crisis from a health perspective, but the appreciation of the global, this being a global crisis and how it affects businesses and how the tenets of what we need to be paying attention to are the same, whether you're running your business in Kenya, in Nairobi, in Nyeri, in the US or in the UK, and how interconnected we all are. So these risks are the new normal, as I had said. The crisis is creating not only economic instability, but it's also the social instability, and we have to think about recovery, and we start the recovery process now. I think we'll have to deal with this crisis. What will happen will have to happen. What we are committed to as Invest in Africa and as EY is to walk with you and hold your hand and be that sounding board to enable you to navigate through this crisis, whether you're running a hospital or a construction firm or a service organization. As you can see, we even have companies in the education sector here. So we are open to having this conversation. And if you have questions, continue running the questions on the chat. We will collate these questions and Frank will be able to respond to the questions. So that's what I wanted to mention. Again, as Invest in Africa, we want to really thank you for your participation. And Lillian has just posted a survey to enable us to gather your feedback on the session. You know, what else would you like covered? Would like to hear your comments. Has this been beneficial? And if we were to run this again, what can we do differently? We have an opportunity to gather your feedback. And on that feedback also, there is information about biashara.now. As we started, I talked about what biashara.now is, and this is the network we have created for entrepreneurs. In case you are not a member, there is a chance to join, and if you are interested, our team will be on standby to contact you in the next 2 days to talk to you about it. Thirdly, in case you want to get in touch with Frank, you know, he has offered a lot of insights and said, talk to us about some of the programs they have for entrepreneurs. I know we didn't get enough time. I'll ask Terry to just project Frank's contacts, his email. We are sharing his email and his contact with you in case you have questions, in case you want to understand how EY can support your business. We've got Frank's contact there. You can see it's frank.muiti@ke.ey.com, and his mobile contact is right there. Remember, we are your partner in your journey of growth as an entrepreneur. So we will be running more and more series about this. Tell us more about what else you'd like covered, who you'd like us to invite, and we thank you very much. We wish you a great day, a great week, and remember, we are in this together because no one has been through this COVID crisis. So thank you so much, and God bless you.